So I want to start this off. This is the first coaching session of the masterclass. And as you all know, my name is Teboho, and I'll be your FX coach here at JP Market. I took a look at a few people that were replying to me on WhatsApp, and some of these guys had really, really good questions. So I started a group for them so that we can talk about everything that they're facing, what's stopping them from trading. And it's those small details that you probably missed out on during class. And hopefully by giving you this, this will bring a lot of understanding, and it will open your eyes on how to actually spot opportunities in the market. And it's not just that, but also timing and all of that. So these guys had really, really good questions. So this group here, I've got Jovan, Patrick, Philip, Dileki, and Tolo, and of course myself and they, right? And they were all coming from different perspectives, and they're all trading the Forex market, trying to achieve what they're achieving. So right now live, I've got four of these guys. I've got Jovan, Philip, Dileki, and Tolo. Could you guys say hi to everyone, please?
Hi guys, this is Jovan, yeah?
Hi Jovan.
Hi, this
Hi guys.
is Dileki. Hi guys.
I'm loving it. There's a lot of you talking at the same time. So welcome all again. We're gonna be covering one by one. So I'm gonna go through someone's question and what you guys were asking. So I'm quickly gonna drop it here on WhatsApp. So we're gonna start off with Jovan and Dileki. You guys had very similar questions. So let's look at what you guys have been saying back to me. Starting off with our lady Dileki here. So Dileki, you've been WhatsApping me for a while. I think you attended my first masterclass, and from there on you just started talking to me. So this is our conversation. All right, so you started off by saying that you used to take signals and they really didn't work for you, and you started doing it by yourself. So well done on that. Let me just unmute your mouse, so I mean your mic, so you can talk back to me if you need to. So you just started sending me a lot of analysis, which I feel like you're actually outdoing yourself, and you're doing very well. So let me go to the pictures that we can actually load up here. Starting off here. So you kept consistent posting back to us. How has it been for you? Can you give us details there?
Yeah, it's been getting there. I've been trying my best, especially since I've seen the strategy of 50 moving average RSI.
Yes.
I've been trying my best in getting there. Yes.
So I'm seeing in most of your charts you're using especially the moving average and a lot of support and resistance. So have you been able to pick up entries, or do you feel like you're either too late or too early? What's been happening with your analysis? Because you do a lot of work, but I'm not sure if you reaping from what you're sowing here.
Yeah, I think the entry is the one that is killing me. Entries only. That's where I'm getting it wrong. Yes.
All right, but have you tried to enter, and what's happened when you try and enter the market?
I do enter sometimes, and then the pullbacks are the one that are killing me. Sometimes I'll make some profit because I'm busy on a demo too much.
Yes, you think so? You think the demo is slowing you down a bit?
No, it's not slowing me. It's giving me some heads up. It's training me more because I love demo. Yes, yeah, so that I can see all my mistakes.
Well, that's perfect. So seeing that you look at a lot of charts, the first thing I'll suggest to you is look into swing trading. Swing trading will help you not to look at too many charts at the same time and not be able to find opportunities, because when you do swing trading, you're onto a longer term type of trading, and it allows you to enter the market within your own schedule. So if you trade small time frames such as your H1, M15, and anything lower than that, you usually miss all the opportunities. So I want you to keep it up with the bigger time frames. Anything from H4 upwards for me is a good swinging time frame. This will give you enough time to find opportunities without rushing it. All right, so that's the whole thing that I want to show you here, but we're going to talk more in detail with it. So I'm going to focus my energy on a lot of support and resistance and some moving averages, which is something that Juvan is also doing here. So we're going to speak to Juvan now. He sent me this beautiful Euro USD chart here. So Juvan, let me unmute your mic there. So yes, Juvan.
My mentor. Yes.
This is what you sent me. What were you going through? What were you trying to figure out here?
Actually, it was just after finishing the masterclass based on trend lines and resistance.
Yes.
And I was just getting into the charts and wanting to apply what I've learned. And
Nice.
I could see, I could see the market differently now, and not just see the candles, but now actually I could see, as the market was moving, it's trending upwards, it's trending downwards.
Yes.
But I could not find the perfect entry. I could say, okay, the market is trending upwards.
Yes.
For example, if you can look at my blue, the
Yes, I
first
see
box I drew.
Yes, I see that blue area.
I was
there.
looking for a buy opportunity because I saw, okay, it's trending upwards. And then, actually, it broke through the trend line. And then, I did my stop loss.
No, but that's okay. That's okay. I want to talk about entries because you made me realize that maybe I didn't give entries enough time. So you also a very big trend line trader, also using the moving average as something to help you see the market better. So which is perfect.
Yes, that is
so Tiliki and Juvan, I'll be happy to answer your question. I'm just gonna go straight to my MT4 now, and we're gonna look at this. Anytime you feel like you wanna drop in a question, just unmute your mouse, let me know that you wanna ask a question, and I'll take that as we're doing this, okay? So Juvan, again, well done on this chart. Very, very beautiful work. Let's see if I can help you with those entries. All right, so let's start off on the whiteboard so we can kind of make sense out of it so that when we take it to the actual market, we know what to look for. So to understand this properly, let's first understand what makes a trend. So basically in an upward trend, you're gonna have a point of support. A point of support is a point in which the market starts moving upwards from there. Okay, so the market will start moving up, 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 up. All right, and then you'll reach a point of resistance, which is where the market will then start moving downwards from there. And before we go back to the first support, we get a brand new support over here, and then the market starts moving up again past the resistance. So it's went through that. So this is technically then a start of a trend, and this is a trend that's going where? So if you want to figure out where the trend is going, just connect the dots. So we're going to connect this dot to this dot, and what you can see there is an upward trend. So the only thing you should be concerned about here is all your support areas, because that's who is winning here. Your buyers are winning. They're making a lot more money than your sellers will ever make. Look at the distance between the resistance and the support versus the distance between resistance and the second support. Much smaller. So you'd want to be on this side. This is the winning team and this is the losing team. So just remember that that's the first thing for you to be able to spot when a trend is happening. This is how it starts. All right, so let's give this points names. This would be point A. This is point B, this is point C. Right? Once you have these 3 points, the probability of you being able to pick up when a trend is about to begin or end are high, because now you're able to see how it's flowing. Now, most of you are breakout traders. Juvan, I noticed that you're trying to follow the trend. When the market comes here, you're trying to pick it up from here and buy it there so that you continue with that. This is perfect. This is 100% what you should be doing. Now let me show you that there could be different scenarios in which this could happen in. So let me redraw it here. To this point, and you kept going with it like that. Right? Giving you a buyer's area, which is above the line, and a seller's area, which is below that yellow line. So this is very important for you to understand. Now, as the market comes back here and hits the yellow line, you are expected to then throw in a buy trade, but you can't throw it in immediately. It wouldn't make sense for you to enter there immediately, because then you're kind of anticipating what the market will do before it even does it. So what you should wait for before you actually execute the buy is for the market to then take a turn. Right? Show us that they've turned over here. They must U-turn. And that first candle that does that for you, that first bullish candle or buy candle, this is where you're gonna look for your buy trade. All right, which means at this point here then becomes your stop loss. And that's how you follow the trend basically. You can't do it until these guys take this U-turn here, because you could enter too early, buy over there, and then the market continues going downwards. So this would have served as your confirmation. This red area over here is the confirmation that we're waiting for. Right? Wait for the market to react to show you that there's a buyer. You are expecting a buyer, but make sure that you find a buyer, find a candle that's moving up from that trend line, so you can buy it and use the bottom of that candle as a stop loss. Let me further elaborate this. So you've entered your buy, and then this immediately happens. Right after you've entered, the market turns from there and starts moving down here. One of two things should have happened. The first one is definitely you hit your stop loss. So stop loss is hit. But it's not just your stop loss that was hit in this case. We've got a support here. Let's call that support 1. We've got another support here. This is support number 2. So this is your A, B, C. And we know that the trend has started. This then be point B. The market then went back down from there to create a point E. At point E, we've got a third support. So support number 3. These are all crucial points that make sure or keep the trend going. So if one of them fail, this means that this could be a beginning of a new trend. So in essence, right here where your stop loss is sitting, it's sitting at support. And if this support fails us, this means that the sellers are stronger. So then immediately as soon as this happens here, as soon as we break this support, this becomes a very serious seller, and this becomes another very serious seller. And the trend has shifted from going upwards to now becoming a trend that's moving downwards, which means that this little zigzag that you're seeing here becomes your new A, B, C, D. So your trend is now shifting down. And this means your trades should also move from being a buyer's bias, right? Not looking for buys, but now looking for selling opportunities. And that's how you find these entries. So when this support was broken, you're supposed to hit stop loss. And then the second step was for you to enter sell trade. Right? Where would you put the stop loss for the sell trade? Also at point C. Right? So you sold here at B after we broke, then your stop loss. So this was the sell, and this is your stop loss over there. So your stop loss would be sitting over here for number 2, which is entering the sell. Okay, so I'm quickly going to go to the platform so that we can see this in a more practical manner.
Can I just ask before we switch over,
Yes,
Mentor,
talk to me.
back to the drawing, the whiteboard, if we can just go back.
Let me just quickly. Yes.
But sometimes the problem I experience is I get a lot of fake outs. For example,
Yes.
let's say I took the buy and then the market reverses exactly there at point 2. And then I
Yes.
think, okay, no, it's a sell. And then it breaks the support. And then it
Yes.
comes up again. Then it is actually a buy. So now I actually lost twice.
Yes.
And then so the initial sell was just like a fake out.
Yes.
And then the
So
market carries on.
that actually happens a lot, and I think for that, the answer to that is leave space. Don't take big trades. Always allow yourself to be wrong. Allow your trade to be wrong, to hit a stop loss, come back again, because the most important trade, like I always tell my traders, the most important trade is the next trade. It's never the one that you're on. It's the one that comes after. And if you get to a point where you can't afford to go in again, then your risk management was off and you need to change your whole game. I would rather see you make small profits in your first attempt than make great profits. Right? But I would rather see you make a lot of profit by failing 5 times, getting a trade wrong 5 times in a row, and then on the 6th time, you get it right.
Thank you, Mentor. That makes sense.
That makes sense.
Okay.
So I took your chart into consideration here, and I want to repaint the whole picture. All right, so we're gonna start off in this area over here. Let me see if I can edit this picture. Let me just copy it, copy image. Now for trendline traders, please understand something. Your work is very important. The way you draw your lines is very important. If you draw the lines skew or without using critical points, it'll feed you wrong information. So you'll always get caught up in traps, in hunts where it's a fake breakout and the market comes back. I mean, it happens to all of us and we can't basically get rid of it. But what we can do is minimize how many times it happens, because you don't want it happening too many times. It's okay for it to happen once in a while, but if it happens too many times, it could blow your account out. Okay, so I want us to start here. You used quite a lot. I'm going to start the chart somewhere around this area just before they started going up, because I want to show you a few concepts that you are applying here. All right, so here what Juvan was applying was trend lines. So it's a lot of systems. I don't think he even realizes that he's using different systems altogether. He's using moving averages. Juvan, would you tell us what moving average you were using there? What else did he use? He used Fibonacci retracement.
Let me just check quickly which moving average I was using.
All right,
I think
perfect.
It was just going through my notes.
All right, he's also using the support and resistance. So he's looking for supply and demand areas. So these are the 4 main strategies he used here that I could pick up. And I want to give you tips on all of them because they really work well together. But if you know how to look at the chart, because if you start looking at all of them at the same time, it's gonna feel very, very complicated. All right, so I'm gonna guess your moving average, because I can see the way it's moving. It's probably the 50 EMA. It's probably the 50 EMA. That's my guess on it.
You are correct, Mentor.
Perfect, to the T. I like that. So let me go to the strategy tester. So basically this date here that we're looking at was actually on the 24th of December 2019. So he was doing back testing. He was learning the strategy. He was trying to master the strategy, which is something that Diliki, I want you to also do. Instead of just looking at the demo account, I want you to then actually practice the strategy first and then take it to the demo account. And this is what was happening. So let's get to it. All right, so here's my platform. I'm going to be loading the strategy tester. So this is it. It usually appears down here, but I like moving it to the middle of the screen like so. So when you're using this, the first thing to do is basically select what you want to test. Are you testing an indicator? Are you testing a expert advisor? So select what you want to test. So in our case, we're going to be using an expert advisor. Our expert advisor is a trading simulator. You can find this at FX Blue. I'd love you to go on that challenge. So you were using the 1 hour time frame. So that's the time frame we're going to select here. The currency that we were trading there was the Euro USD. So let's find Euro USD. So there we go, Euro USD. The model, I always suggest that you use control points. It's the perfect model to use. You can try out all the other settings and just see the difference, but this is the one that I usually use. We're going to use the date because we've got specific dates that we want to go to. The date that we want to start on is the 24th of December 2019. That's the one, right until today's date. Right, so I won't go that far, but I just want to show you all the concepts all in one. All right, so this is your speed control. This won't do anything. This won't work until the chart has started. Okay, so the next thing to do from here is hit stop. So there you have it. We've got Euro USD. We've got my buttons here, buy and sell. So I'll choose what I want to do during the practice run. Okay, so I'm going to drop down my lot sizes to at least a 0.02. So there we go. Let's change this moving average. He was using a 50 exponential moving average. So there we go. That's how it looked. All right, so currently this is how the chart looked before Juvan's chart started showing up and showing what it's got over there. So I want to start right here and start showing you a few things you have to do before you even start making trading decisions. Okay, because we don't know what's going to happen. We don't know the future. So this is why I feel like strategy testing is the perfect way to practice your strategy. Just leave your comments below. Say amen if you understand me. If you don't get me yet, keep watching and you'll see what we're talking about here. So the first thing is first, Juvan, this is where the whole thing started, and we're trying to come up with trading decisions. Okay, so in most cases, when you open your chart, you won't exactly see what's happening. Likewise to the league, we don't know what's going to happen, but we can see what has already happened. So let's take those down. So the first thing is first, I see a very big seller over here. I see another seller over there, and I see another one over here. So these are all points of resistance, points where the market was going down. And I told you we only need 2 points. I'll call this one point 1 and this one point 2. With just these 2 points, we can already start drawing our trend lines. I start drawing where the trend is moving. So all I have to do is connect point 1 right at the top to point 2, and then I'm going to extend this line out. So just click ray and it will extend all the way out. So this is a downward trend, and until we break this trend line, we're still in a downward trend. But then there's a resistance number 3 that showed itself over here. All right, and it's also moving the market much lower than it was. So it's also a critical point for us to look at. And what other thing you can use to determine whether it's important or not? Look at the action. They went through the trend line, went higher than the trend line, and the moving average, and went below it again. So these are signs of critical points in history. Here's another one. This guy started down here. They started moving up from support, went through the moving average, created a high, and then went below the moving average. So this is a critical point at number 2. Number 1 is purely a critical point because he's the first one to move the market down. Okay, that's why it's so important. So now we can also see a relationship between connecting number 2 and number 3. And you can see that this line is more tilted towards where the price is. It's closer to the price. So which means that if this trend line, the one that I just drew, breaks, then the trend is also broken. So we can then minimize this one here in the meantime, or I'll bring it back. Right, so I just shrink it. So right now, the one we're looking at is support 2 and support 3. So obviously at this point, it's a bit too late to start selling this market because it's a downward market, because it's happened. Resistance 2 is there, resistance 3 is there. We're not quite sure if it'll continue going down, so it's fine. We're gonna wait for breakouts because that's what I saw you guys really like breakouts. So to help me with that, let me just put horizontal lines here. So these are all the current resistances. Okay, so exactly what I'm doing is what you're supposed to be doing when you're also practicing at home. There's nothing wrong with this. Right? So currently what we're looking at is the market is in this area here. They've touched the 50 moving average, which kind of makes this a critical point to look at. So this might be our resistance number 4, and we should keep an eye out for that. So could this be number 4? So if you're going to take the chance, this is where you would have taken a sell opportunity in this area here. So let's see what happens there. Let me get the strategy tester. Let me play it out and see what happens after that. So there we go. The market is still moving in that red area right next to the moving average. We're expecting a downward movement since we are in a downtrend. So there we go. We have a downward movement. Looks like this market wants to sell already. So it's reacting well. How you know that it's reacting well? It's because it's giving you space for stop losses. Let me just copy this line. It's giving you space to put a stop loss if you entered a sell at any point there. So clearly you can see that the market reacted from the 50 moving average, and you could have sold anyway in this area here and put your stop loss up there, and you would have made it out of this trade with profit. Right? But that's not what we're looking for. We're looking for a buying opportunity. So far, number 4 has declared itself an actual resistance. So this is resistance number 4, which becomes an important point for us to look at. So immediately after this, this becomes a price for me to look at. Like my previous price that I was concerned about was this one, number 3. So if the market broke out of here from number 4, continued going upwards like this, I'd only start buying my trades from number 3 once we break that resistance. Okay, since it went down, this became our most recent resistance, our most recent seller, in other words, which means if this breaks, the resistance will break. So let me quickly go back to our notes. Let me move this out of the way though. So we're looking for this. Where you're seeing that blue dot, we're looking for a support to break. But in this case, because it's a downward trade, we're looking for resistance to break. So if we're looking at this one here, we're waiting for point C, where the stop loss should be sitting at, to then fault and break. And this is where we'll take our buy, and our stop loss will be at the bottom. So that's what we're looking for at all times. It shouldn't be hard. So let's go back to the chart and see. So we're back to the chart. This is number 4. Let's see what happens. Do they continue going down? What's going to happen? So I'm just going to put a pending order here at the 1.1960. So I'm going to put a buy pending order right there. So here's a buy stop. So basically they'll pick me up as they go on ahead. So place order over there and continue playing this. So there's my buy order. As soon as they reach that area, they will trigger this trade, and then I'm in it. I'm already buying this market. I'm buying the breakout of this trend. Oops, so they missed it a bit there. So it looks like they might want to pull back down. So if you're selling, this is where you would sell and put your stop loss there where I put my buy entry. So there it go, they broke out. So that's a breakout candle, and it touched my buy trade. Right? So at this point, we can also start looking at how it's affecting your trading account. So you can keep up with that right over there. So there at that point, the trade is in. We literally broke out of this trend line, and we're expecting this market to continue going up. Okay? How far it can go up, we really don't care, but we've caught the trend while it just started, and that's the whole point. Where would your stop loss be in this area? So since we're in an upward trend, we are looking for support number 1. And support number 1, this is the guy that actually broke the market. But you realize that this guy and this guy and this guy are all the same people. So this whole area here, let me just put a blue highlight over it. It gets pink. Make it blue. So So this whole area here becomes your area of support or your area of supply. So this then can just be written as point A. So this is A, where the market turned, took a U-turn from there and started moving up. We just took a trade because we're anticipating that B will happen higher than A. Okay, so let's keep going. Let's see what happens. Let me zoom in a bit so we can see more details here. All right, so I want us to also not forget that this here is a point of resistance. This is also resistance number 4. So let me make that pink so we can remember that. So this area here is the point that if the market was not really breaking out, it will turn around this area and start moving back down. Let me extend this here. So there we go, it's perfect. So let's keep it going. Let's see what happens from here. So they touched it and moved down a bit. Are they gonna go back in? So they back in under your moving average. So at this point, you basically panicking and you don't know what's gonna happen. But your stop loss should always be underneath point A. So this is where you should cut this trade, because if it comes back here, it means the trade is continuing in a downward direction. So let's set a stop loss at this price level here. So if they get there, they'll hit my stop loss. If they don't get there, I'm still in this trade. I'm holding on strong. So there they go. They're picking up once again, back to your entry level. And right now they're playing above that moving average, and they're also playing above that trend line. So clearly an upward trend has begun here. It's clearly broken out. So you could have bought at any time here because you're still within the same area that we started buying from. So also, as they keep going higher and higher, this allows you to now start shifting your stop loss. So at this point, it's very clear that they've broken and they went higher than the previous resistance, which was number 4. What we can then do is look for another support area, which is over here, to then put our stop loss there. It's still below the moving average, so it's legal. So I'm gonna move my stop loss up here, which then shrinks the amount of risk that I took by almost half of what it used to be. So that's my new stop loss level. I always recommend that your stop loss, if you're buying in this case, should always be below your moving average, because your moving average should then react as a, what do you call this? Should react as a support level to reject price every time price comes there, right? For some of you then, you have seen a bit of resistance over here. So if you missed the breakout, this would have been your first resistance. The market then went back down to the pink area, found some support over here, right? Now it's moving back up again. So if you were to anticipate an upward movement, you'd put another buy order over here. So I'm not suggesting that you take both of them. I'm saying if you miss the first opportunity, you could always catch the market over here with a buy order. There we go, I just missed it. All right, so you could have added a buy trade over here, and you could have went with the market from there because we broke this resistance area over here. All right, so there we go, the market is pushing up again. So obviously 0.3 is another resistance that we need to look forward to. So if we touch it, the market might take a U-turn, but it's not definite yet. Okay, so I'm just gonna extend it out so we can all see it. So if we touch that black line, expect that the market might turn and start moving down again. Same for resistance number 2 and same for resistance number 1 here. Okay, so these are all points that the market can take a U-turn from, but that will all highly depend on what or how the market reacts from those points. So let me just fast track it a bit so we can see a bit more quicker. So far doing nicely, running nice profits there. Looks like we're going for resistance number 3. There we go. So we just hit resistance number 3. We even broke it, went above it. But let's keep an eye out and see how the price reacts from that resistance. All right, so there we go. Red candle, could it be? No. So that was a retest. The market is continuing. So it's still going up. All right, so I'm going to put little X's. There's resistance number 2. Are they going to react from it? It looks like they reacted a bit from there, but we'll talk more about it. So let's look at all the breakouts. We broke out at 4. We broke at 3. Right now, it looks like we hit number 2 and the market wants to move down a bit. All right. Okay, there we back at number 2. We broke number 2. Are we gonna go beneath it? Nope, continuing. So number 2 is also another broken resistance. All right, so that looks like a retest for number 2. Yep, price staying above resistance number 2. So they're gonna use it as a support. They're gonna keep pushing up with it. There we go, we're at number 1. Are they gonna take a turn here? Yes. Are they gonna keep going down? Yeah, so you could have tried taking a sell here if you're brave, but you'll be going against the trend. This trend hasn't broken. It hasn't shown us any point of, what do you call this? Any point of weakness, basically. There's no weakness in the market as of yet. So we're gonna keep it going and see what happens to it. All right, so it looks like they want to push down. So the safest thing at this point is looking at resistance number 2, which reacted as a support over here. All right, and this is a good point because we found a lot of buying power over here and the market continued going up. So this would be a good point to then put your stop loss. Okay, so we're going to take the stop loss from where it is. We're going to put it down here. So we're protecting our money in this case. So no matter what happens to this trade from here on, you're walking away with profits because now your stop loss is on the profit side of things. So it looks like they really want to come for that stop loss. They reacted from resistance number 1. Okay, it looks like they're breaking it as well before hitting your stop loss. So there they go, they just broke it. So this means your most recent resistance will be this one over here. So I suggest you move your stop loss to this one here. Okay, so we also just broke resistance number 1 over here. So these are all broken resistances. And the chances is that the market is gonna come back to this point in the near future and then give us a retest or something along those lines. That's why we keep track of those areas. So the market is still going up. We just moved our stop loss. Our most important price level at this point is this price level over here where we have our stop loss, because that could also be the point where we're gonna start selling from, but it's not yet clear. So let's keep going. Could that be a retest on top of support number 1? Yep, looks like a retest. Market pushing up there. Right. So if they go above the high here, the highest high, I'm gonna move my new price to this new support that we're seeing over there. Okay, they hit the support number 1 again, or resistance number 1, which is now acting as a support. So I'm referring to this ones here. So if they break above this area here, this is then definitely a new support for me. So there they go, they're about to break, they broke it. So this then becomes my next new important price, right? So my stop loss should then move over here. And if the market comes down to that area, that's literally where I will sell. So let me just pause it so I can fix everything here. So this is my new price level. This is my support. And my stop loss should be moved right underneath that. So it's still the same area which I'm looking for selling opportunities from, because if they break this support, this could be the end of this upward trend. So let's keep it going. All right, so there we go. So I'm just gonna move this price to the left here because it looks wrong on the right. I'm gonna leave it here. So that's my most recent important price. Also, what I've noticed is that we've actually went through a bit of support since coming up here. This will then give us this channel. By connecting this support to this support will give us this channel. By connecting it to the third support, it will give us this final channel that we have over here. So basically it gives us this first channel. And if we go back to Jivan's chart, this is what he was picking up in the first run. So let's quickly go back to it. Okay, so that's the channel that he picked up. So let me show you how he should have traded that area over there. So back to the chart. So it's building this channel. So anything below this channel is technically a breakout. And if a breakout happens in an uptrend, it means we should kill all profits going up and start selling. And that's how the game goes. So we have a stop loss here at this current support at the 1.1198. Let's keep going. So it looks like there's another support there, even though it hasn't touched. There we go. It just touched our trend line. It gapped. So market gaps do happen, guys. Don't be surprised. Right. So the market clearly is now trading beneath this trend line over here. So this is the first time we ever lost trend since this market has been going up from point A. So this literally makes this part right up here our point B. So this is point B. Point C will happen somewhere. Right, so let me just remove the profits here for a bit so we can do more analysis. The market has broken out. We're looking for selling opportunities. We've got a lot of broken supports and resistances. Right? One could argue that resistance number one was retested because price broke, came back to it, and went higher. So this was retested. Right, support number two, likewise, the market broke, went up, came down, retested, and went up. So we can say this one is also retested. Okay, so they become a bit less important if they've been used. Support number three, on the other hand, this barely tested. It came, touched once, and left after that. So no one had the opportunity to buy at resistance number three. All right. So what you do here, once you have point A and point B, what you immediately do is then take your Fibonacci retracement tool. So let me just fix it there. Set to default, delete 23, delete 38, delete everything else underneath the 100, and okay. So there we go. Point A becomes your 100 area. Point B becomes your 0 area. So I'm just going to shift it here to the side so we don't see too many lines going on there. All right. So our most important area of support would be anything between 50 and 61, right over here. This is where we expect the market to pull back to and then start bouncing or start moving back up from this area. So this is a buying area. This is 50 to 61% of the actual movement AB has made. So we're looking for buy opportunities there. And if you realize that the support or the resistance that's sitting right in that area is number 3, this gives us a good vision of where we're going. We're literally going to support or resistance number 3 for a retest. So we can shrink number 2 by, can shrink number 1 by, we are literally going to go back to number 3, and we want to create a point C when we get there. So I'm expecting to see a C anyway in this area here. So this is a retracement, proper retracement. So we're going to be selling all the way from here down back to resistance number 3. But that's if they break this support, this most recent support level we have over here. So far it hasn't been broken. This could still be a fake breakout for the market to just start moving up from there. So let's see how it plays out. So it looks like the market is shying away from that area. And this is actually very important information for you, because then this becomes your new resistance level, support level. So I'm going to move my stop loss up here. And if they come back here again, I know they're definitely going to break it to the downside. Okay, so let's enter, or let's set a pending sell trade over here. So sell stop, place order, and then let's move our stop loss to the same area, and then watch what happens. And now we can see how the account is doing from here on. Let me bring the information back. And so far we're running a profit of $20. So someone would say that's a retest. So there they go. So they just broke through that support area, which was then my selling area or my stop loss area. So that was a very important point for our trade. And that's why we took a sell trade over there. And we're now looking at the market moving downwards. And our most important seller at this point is seller number B. Right, and we expect the market to keep going down. So this is where I'll put my stop loss, right up there at point B. Yes, do you want to ask a question?
Excuse me? Yes, Mentor. I just wanted to ask about the candlestick pattern that would form at the breakout of that support. What specifically are we looking for? Yes, no. Which candle?
Let me see if I can...
To confirm further bearish momentum.
Yes, let me show you that. Let me take a picture of this. All right, thank you for asking that. So basically your confirmation or your signal into that trade, we were looking at this here. This was our last support. You see that? So as that is our last support, this becomes the most critical point to keep this market in an upward move. If this support fails, the whole trend from A has failed. It's done its job, it's finished. And now we're looking for selling opportunities in that area. So what happened is that the market then broke out from the trend line over here. So this was our first sign of a breakout, sign that now the sellers are gaining strength. They then moved all the way down because we're waiting for them to break this price level, which is this price. Right? They then went all the way down. Before breaking it, they reacted by turning here. You see that? So they turned over here and started moving back up at the same support. So this became the second time they're using that same support. So it's extra important now. We've got tick 1, tick 2. So if they're coming back for the third time to that support, that was our reasoning for selling over here. All right, because now this point here is going to be acting as a resistance from here on. Because now we're well below it. We broke it once, twice. So whoever is selling here or up here is a very strong seller, because they were able to break 2 bulls, 2 buyers lost their positions over here. So whoever was buying here and whoever was buying over here, they've lost to the sellers up here. And that's your confirmation. So you would have set a pending order here, a sell pending order over here. Okay, so even if you bought this, it was okay. You're gonna hit stop loss and then sell right over there. All right, so I hope that's a bit clear, Juvan.
Yes, that is quite clear, because I was actually looking to, I see my mistake now. I wasn't looking at the recent support level.
Yes.
I was just looking, it's breaking the trend line.
Exactly.
And then,
so whenever we break a trend line, you should always look for the recent resistance or recent support. Remember here at number 4, down here at 4, this was our
yes,
most recent resistance. And as soon as that gave in and we saw the price above that, we started looking for buying opportunities and stop losses at point A. Right? Likewise here at B, we broke this trend line, we well below it. Our most recent resistance or support in this case was this one here. So that became the point that we're willing to sell below. So as soon as they go below this, we will sell. So they made it a bit easy by coming down, touching there and going back up. So that showed us that this is a double support now. And if they came in for the third time, chances are that they were gonna fall lower. Why? Because we're already below our channel that's moving upwards. So the strength just went to the sellers in that case. And that's why we're selling here, nothing else. So if they came back up and started going towards B, they would kick us out, obviously, and we'll start buying from there again. Okay? So let's see.
Can I just ask, sorry, can we see this as a mini head and shoulders pattern forming?
That's happening right now.
Yes,
here. Okay, so at this point, I think it's a bit too early to declare head and shoulder. But what's happening right now, what I can clearly see is your A, B, and we're going to create a C. So we broke out. Okay. We broke all these resistances. We broke 4, 3, 2, and 1, and we haven't had a proper retest. So we're going for a retest right now.
Oh, okay, that makes sense.
Yeah, so basically that retest will happen between 50 and 61, and the resistance or support that's sitting there is support number 3. So that's where I'm expecting it to go, obviously, because I've got a point A, I've got a point B. Point A broke resistance, point B broke support. So they're both equally strong, but the battle will show itself at point C. So that's where we want to be buying from. There's nothing else stopping us from here. All right, so you can see that, right? So let's keep it going so you can see more of it. So we sell in there. Our stop loss is sitting at point B. All right, so clearly the market has dropped well below the moving average, which means that our stop losses can now move from being at point B to moving to this point over here. So this becomes our new stop loss area. So let's set a stop loss for this sell trade. So our stop loss is in. Basically, this is all we could ever lose from this trade. I'm still expecting it to go down. So there we go, it keeps moving. So what you can see now is we've broken. So this was our most recent seller. So we had a buyer, small buyer over here, and that was also broken by this seller over here. So this also makes it a pretty decent place to put your stop loss. All right, so let's do that. I'm gonna move my stop loss from there to there. And let's keep going. All right, so they hit our stop loss and immediately moved down from there. So this is a retest. Broke, test, retest. So this also tells you that you can enter another sell trade over here. So just wait for that candle to then close and give you an opportunity to enter this trade. So I'll sell it anywhere below this area here. Because that's our most recent support. And we're in a downtrend, so I expect the market to continue going down. There we go. So I feel like I moved my stop loss too early over there. Should have let it move a bit. But these things happen in the real market, so there's no reason for me to now cry. So I'm still gonna put my stop loss over there. So if they break this, my stop loss will be moved here. There they go. So you see they just broke that. So now I'm going to move my stop loss to this area over here. This is just to protect yourself in case the market quickly comes back. So that's my recent stop loss. Let's keep going. There they go. So you can see they've reached support number 3 or resistance number 3. So in this area, I expect them to start looking for buying opportunities. So let me just clear out my chart, so because I feel like I have too much happening here now, enough to confuse you. So we're back at point C at support number 3. I'm expecting the market to take a U-turn somewhere around this area and then start moving up. So this means we need to find our new channel, right? That's moving downwards. So I'm going to take it from this guy up here, connect it to this one over here, and I'm going to continue with this that way. Okay, so this is our new channel. Let me just use the equidistance. So we're done with the up movement. We're now still looking at the down. So as soon as they break this blue channel here, that's when I'll start looking for buying opportunities and probably kill my sell trade. So let's keep going. We're almost even done with it. So it looks like they're still going lower. They went way below our resistance number 3, right? But we haven't seen a buyer as of yet. Right, so there's our first buyer coming up strongly there, finding a bit of resistance, still pushing higher, and then finally breaking. Right, so here at this point, we're well above the trend line, which means that point C has been created. And we can start looking for buying opportunities here and kill all trades that are selling. Okay, so we made a bit of profit, $1.50 before this guy's broke out. So let's kill that, and then let's wait for a buying opportunity. So where would I buy here? My most recent resistance that I can see is right over here where the stop loss used to be. So if they touch this black line, I want them to buy in. So I'm going to set a buy order over here. So buy stop, right? My stop loss will be down here at point C. So there you go. My buy just got triggered. So they broke out and my buy just got activated. Okay, so it's moving against us, but remember that our stop loss is down here at point C where we found our first buyer right here. Okay, so that's where our stop loss is. So let me just shrink number 3 down to size right over there. So number 3 reacted well. We expect it to go higher than this and keep going further up. So we're still waiting for the market to then give us a retest. Let's set a stop loss for this buy trade. If they move higher than where we entered, they will leave us a brand new support, and that's where our stop loss will move to. So far, it looks like our stop loss will be right over here, right? But it's not confirmed until they move higher than where we've entered, because that's where our previous resistance was sitting at. So until we go higher than this, which is right over here, there's no point in you moving your stop loss. So we're back there again, right? So now we're clearly higher than that. So you should then take your stop loss, move it here to the brand new price. And this becomes your most recent support area. So if they come back there, I am selling them. I don't care what they say. So let's keep going. So there you go. They moved all the way up. So I'm going to pause it here so that I can get my new analysis on this chart. All right. So this, we're done with this downtrend. this small downtrend that we had. So it finished right over here when we broke out. Now we're back in an upward trend. This is my point, my first buyer. This was my second buyer, but we can use this one over here to make it proper, and then we extend it. And this will just go over there. Okay, so now I'm in the third channel. So if we go back to the drawing that Juvan gave us, and so we are now in this point over here. So nothing has changed, nothing at all. So now we're in that area. Our most recent buyer, so this is our most important support level. So we're gonna stop that price over there. So if they come back down there and break the trend line and break this price, we are selling them from this price onwards. So our most recent support level in that case. Right. That's why our stop loss is sitting right underneath that. So they came down. Are they going to give us a bit of support over there? We'll just have to see. So they're moving up. Right, now they're on the trend line, they're outside the trend line. Right, so once they're outside the trend line, we can clearly see now they're playing in sellers territory, and all the sellers are all sitting there looking at this price at the 1.1813 level. So basically that's where I should also look for selling opportunities. So let me put a sell order there, sell stop at this price 18113. Right, place. So they'll hit my stop loss and obviously activate my sell in that case. So there they go. So they hit my stop loss, hit that price, and they're even going upwards after that. So they might kick us. Let's see what happens. There they go. So they just broke out. Then obviously your stop loss level will be the highest resistance we can find, which is then this one over here. So let's quickly set our stop loss. Perfect. So the sell trade is running there. Right, so the downtrend has begun. So we're just waiting for our new resistance so that we can move our stop loss. We're not yet able to move it. Okay, so this trend here, this upward trend has ended. Our focus has now shifted to the downward trend that's moving currently. So I'm just going to add a trend line. So this one is still temporary until we see the real second seller. So there we go, we're back to the moving average. Looks like the market is reacting well from that moving average. So if they keep going down from here, that will be our new stop loss. So there we go, they're reacting well. Still waiting for them to move a bit lower. So there they go. So they moved low enough to touch the support here and then start reacting from there. So this is enough information for me to then take my stop loss, move it down here, and this is the seller we are now focused on. So if this seller gives in, we're out of this trade. So this then becomes my most important price level currently. And it goes on. So at this point, the trade is obviously a risk-free trade because our stop loss is on the profit end of things. So the market falling nicely down there. Oh, sorry, I forgot to add my new channel in there. So since we've got two sellers, we've got this one here and we've got this one up here, I can use the 2 points and create a brand new channel for myself. So that point to this point, which then basically makes it this point over here. And then I just stretch it out. Right. So instead of using this guy here, I used this one here, which is one in the same resistance. Okay, and that's the 2 points I connected. Now the market is going to keep going in this channel till this breaks. I'm selling. So that's how you keep up with the trend. You follow the trend by moving your stop loss and guaranteeing yourself profits. Well, that's my theory anyway around this. So the market keeps going. Yes, talk to me.
Mentor, can you just explain why you didn't use the second point to draw the channel? Why you didn't start it from the top? Yeah.
You mean up here? Okay, yeah, I can definitely do that. So I'm gonna draw the black trend line over there as well. So if I draw it from here, connecting it up here, so it makes sense when you have it like this, right? And then if you extend it out, it was working properly, right? But at this point, we've got this guy, right? Upside down. We've got a resistance over here. We've got another one over here. We've got another one over here. And these three make this black trend line that I just drew here. But we started another resistance over here. So this is your most recent one. This is the steepest one you have. So you're always looking for the steepest line you can find because you want to catch the breakout while it's early. Right? Which means that by the time we break the black one, it'll be too late because we already have a trend within a trend. Okay, so I wouldn't use the black one anymore because now we have a brand new resistance that we can connect. So we connected these two guys over here.
Mentor, would you say the black trend line is not valid anymore, or?
Yes, it's not valid anymore due to the fact that we created a brand new resistance. So we've got a brand new resistance that could only connect to this one. It couldn't connect to this one here. And let me just try and force it. So I'm gonna force it to connect between the first one and the new one. And what you'll see there is that we cut through the price. And this is what I'm trying to avoid, this mess over here.
Okay, so a trend line should never cut through price.
Should not cut through price, ever. Okay, so that's all I'm avoiding there. So to do that, I'll have to then remove this black trend line and use it from this point here. So this is my resistance and this is also my resistance. So I've got the most recent trend going on here. So that's the only reason.
Okay, and Mentor, when you were eyeing the sell at the previous point, when it broke the support, right?
Yes.
What take profit did you have in mind? Like, did you look at the next support level as a take profit, or
no,
did you just double your risk?
No. So my take profit is always the point in which trend changes. Remember, you're trading trend lines. So the whole thing's about keeping up with the trend. So as soon as I sold up here, I'm going to keep this sell until this trend shifts from being a downtrend to an uptrend. And this is how you maximize your trades, basically. Maximize all the profits possible out of that trend. Right.
Wow. Okay.
So that's
why
your
stop loss basically access your take profit when you get out of the trend.
Yes, that's exactly what it is. So I'm trailing the market. As it goes low, I'm going lower with it. If it breaks out, it will break me as well. And if it hits my stop loss, that means that should have been my point where I start buying from anyway, because the downtrend is over. So all the other small profits in between, I'm not trying to get all the profits. I'm trying to get the whole movement of the channel or the trend line that you've drawn, because that's the whole point of drawing trend lines. Is once it's invalid, kill your profit.
How often a day would you check a trade like this, Mentor? Because this is an intraday trade, right?
Yes. This is not intraday, this is swinging.
Swinging, okay.
Yeah, because you're using the H1 time frame as your entry time frame. This means you are in the swinger phase of things. So you're checking it at least 4 times a day. Every 4 hours, you come back and see what's happening. You get me? So if you wanted to do intraday, you would have to use the 15 minutes as your entry time frame. Okay.
Would that be best for beginner to use?
No, it's always best to swing as a beginner, because it gives you enough time to keep up with the chart. The scalping time frame move way too fast for someone that's still trying to learn things.
Okay.
Yeah. So
thanks,
you won't be
Mentor.
able to keep up with it. Yes.
What would be, this is totally off topic, but for a beginner to start swing trading, what would be the minimum balance to start off with? Because you need to be able, I need to be able to
hold the margins,
withstand the pullback and the margins.
That's a nice question. It's highly dependent on the currencies that you'll be trading, first of all. So if you're trading in currencies like Euro USD, USD JPY, GBP USD, those are all major currencies that make about, when we say they've moved a lot, they've only moved 100 pips. Okay, so 100 pips of the 0.01 is $10. So that's when the market has really moved a lot. And those are the type of drawdowns and profits you should expect. They're in between the hundreds. You know what I'm saying?
Okay.
By understanding that, you already know that, okay, if I've got a $200 account, I can fit in about 20 trades with a 0.01 and cover a lot of space using those. So you've got enough space to work with it. But if you're going to go for currencies such as your ZAR, commodities such as gold and oil, those are big movers. In a day, those guys can go for 300 to 500 pips. It's nothing to them. They move that aggressively per day. So basically the same $200 account on those currencies or those instruments is nothing. All right, so it's highly relative to what you're trading. So if you keep it up with the major pairs, $200 should be a nice amount to start off with. But obviously, I always recommend that if you're going to start trading, trade $1,000 account, and you'll see the difference that it makes in your trading, because it allows you to stay patient. And just because you have $1,000 doesn't mean now go and use big lot sizes like a mini lot, like a 0.1. That's already big. It's the same, like you're going backwards. So just because I have $1,000 here, shouldn't mean that I should use big lot sizes. This $1,000 here is here to allow me to have as many trade opportunities as I want.
Okay, so as a beginner, you would not recommend trading pairs such as GBP, JPY, and gold, because those are fast movers.
Yeah, mostly your exotics and your commodities. Right, the exotic, the minor pairs like your GBP, JPY, they're not too bad. I know they move aggressively, but compared to gold, oil, the ZAR, the Mexican peso, they're nothing. Those ones move like crazy. And then even those have bigger guys like your indices, your Nasdaqs, your SP 500, all those guys also move a lot more than what gold and oil can move. So you should just stick within, what do you call this? Within currencies that don't move that much, because you can always make up the money with lot sizes. But if they move too much, even if you use the smallest lot size, it wouldn't matter because it moves too much anyway.
Okay.
So it takes away the control. Yes, that's perfect. So it takes the whole control away from you. So let's finish off. So we're still in a downtrend. We're still holding on. We're looking for our next support level. So currently, this is our most recent support. So as soon as this is broken, we'll use that resistance, whatever resistance is coming here, as our brand new stop loss area. So stop loss, we then move down here. And you keep it going, keep taking, keep milking it. So if you notice, we're back on support or resistance number 4 for an official retest. Since it's right at the bottom, chances are that the market can react well from this and start moving back up, but nothing is guaranteed yet. So there we go, we just went below our previous support level, which was this one, which is now this one over here. So this means that this could potentially be our new point of resistance, but it's still too close to the current one, so I'm going to leave it there as it is. All right, so they're playing on our trend line now. Looks like they're breaking it. Not quite. Are they going to move down? All right, so the trend line has been broken at this point. So at this point, you have the opportunity to close your profits right now if you feel like this is the end of this trend, okay? Or you can keep it going until they break that resistance up there that we have. So let's keep going. I always like the resistance. Rather they fetch me, I don't want to fetch the profits. The profit must fetch me. Because if they go lower than this, I get to maximize even further than I did. Mind you, this is still a very bullish area, but they haven't taken it until they take this price level up here. Right? They're not bulls, true bulls, until they break that and go above that 50 moving average. So it looks like they want to go lower. Perfect. So they just went below the lowest low, which was here, which makes this then my most recent price level, which is where I should then move my stop loss over here. Okay, guys, this is the last example, don't worry. I just wanted to be very detailed about this so you guys are able to find your entries. I don't want you guys to still be struggling next week. So they're well below that. They've broken this and we can't deny that. If they keep going lower, we might need to adjust our trend line so it looks something like this. Connecting it to this one here, because that's the most recent one, to this one. Okay, but no need as of yet, so let's keep holding. So it looks like they're reacting and they just hit my stop loss right over there. So I'm going to pause it right there. I should have actually had a buy trade going on here. So I'm going to put a buy stop over here. And please notice, I haven't changed my lot size. I've been using the same lot size, 0.02. There's no need to grow your lot sizes. If you know how to enter properly, you'll know what you're doing. So there we go. The market went up from there. Obviously, your stop loss level. So we're down with this downtrend. Kill it. Just delete all of this. So then this becomes the most important point to start the buy trend right over here. So they broke out, retested that blue line, and then started shifting upwards. So my stop loss will obviously come sit right down here. So let's set up the stop loss. So this is our last trade. Then we're moving on to the next question. But you should have found a lot of answers within this simple illustration that I showed you here with the Euro USD, even though I want to look at a bit more of those. So the market reacting well from there. We're still waiting for a support area so that we can move our stop loss to that area over there. So there we go, market went up, came for a test. So if they go higher than that, I might consider moving my stop loss. So they went higher than that, so my stop loss can then be moved over here. So my most important point at this time would be this point. And this is my new support. So if they come back there, I'll be looking for a sell opportunity. All right, so there they go. They're giving us a brand new support. All right, so it looks like they're going higher than that. So this might be my most recent support level over there. Because we're looking at this here, we're looking at the price. Every time we go higher than the previous price, that kind of gives us an opportunity to move our stop loss closer and look for earlier entries. So let's keep going. So this is my most recent support level over there. Bam, they hit it. So we're out of this trade. Okay, so we're out of that trade. Basically, once we broke that, it gives us a sell opportunity. So I'm going to hit sell over there. All right. If you're wondering what are you talking about, if you connect this to there, you can definitely see the breakout. So we're connecting these two supports. If you do that, there's your breakout. We hit this crucial point there, and this was the channel that we just broke. Small channel compared to the other channels we've had in here. Okay, so that became your most important place to sell right over here. Okay, so let's sell. Let's see what happens. All right, so selling nicely all the way down to this areas. Let's see how far they're willing to take it. So at this point, obviously your stop loss will be sitting right up here. All right, so could that be our second sell right over there? Yes, so that's our second sell. So the market is already reactive on that moving average, like it's going down. Okay, so in this case, this trend broke there, stopped over here. Now it looks like we're starting a brand new downward trend from this seller to this seller over here. Okay, so let's wait for them to go below our most recent buyer, which is here, and then we can move our stop loss to this area over here. Okay, if that doesn't happen, it means this trend is still going upwards. So it looks like we are above that trend line. Alright, so still our most recent resistance is this one up here, and if they come for this, we should be out of that trade and probably look for buying opportunities right there. I should actually put a buy trade. So if we hit stop loss there, I'll automatically go into a buy trade. So there we go, they just moved down. Looks like a retest of that trend line. Stop loss and my buy trade is in. Okay, so I lost a few bucks there, but we're still growing strong over here. So in this case, we've had a resistance, a support, and not to forget the support. So what we can do now is just update the information. It means our channels were too small to look at, and that's why we got trapped in there. So no stress, just redraw it, support to proper support over here, and then you start stretching it all the way out, and then you put the roof on top over there. So that's the actual channel that we should have been buying or selling. So let's see how far this buy will take us. So my stop loss for this buy will be right over here at this price level. All right. So as a matter of fact, I should update this from there to there. Stretch it out. So that's where my stop loss would be sitting, or my sell trade would be sitting. Okay, so it looks like my buy trade is in profit. So before it goes even further, let's just kill all this trade and stop it right over here. Okay, so we're done. So the total profits made out of this was $38. If we bring back the strategy tester, we can actually see the graph of how you were making that money. You can go under results and see how much you made per trade. So the first trade we made $19. Second trade we lost 6 cents. Third trade we made $1.70. Fourth trade made 19 cents. Fifth trade we made $14. Sixth trade $3.40. Seventh trade we lost $2. Trade number 8 we made $2.40. So we're not trying to escape losing. Losing is part of the game, but if you know where to put your stop loss and where to trail the market from and how to spot the breakouts that I just showed you here, you can actually keep a quite consistent profile while trading. So you really don't need to work hard on this. So I hope this was very educational for you, especially Juvan and Diliki. I hope this really answered you guys. So let me know what's your thoughts so far before I cover what Tulu asked and what Philip has asked. Yes, talk.
This is amazing. Yeah.
Is it making sense? Is this what you were looking for?
Making a lot of sense. I was looking at the market all wrong, just wanting to get in, get a quick buck and get out.
Yes.
But actually, yeah, this makes much more sense, and it's much more sustainable in the long run.
Thank you. I like to hear that. It is. It's not something easy to just go about and just jump into trades. But if you know how to follow the market, accept the mistakes, the small trading mistakes you make, you'll always end up making money. So there's another breakout. We expect the market to then move down from this area. It's really nothing hard, man. As long as you know how to keep up with the market, what's your recent price action, and as soon as that breaks, how to enter and how to set a stop loss. It's as easy as that. And that once that's done, there's really nothing else to do from there, but just follow the trend. Trend is your friend. Okay, so I did it with one entry each, one entry, and you can do the same so that when you lose, you don't lose a lot. Dileki, I see your hand is up. Talk to me. Dileki, such a bad person right now. I apologize for butchering your name.
Okay, hi, say yes, thank you very much. I clearly now get you. I really get you. Thank you very much. Well understood. Thank you very much. Sir.
I'm excited. So get those entries. Next time when you send me those charts, I want to see entries. Mentor, I entered here, coach. This was my entry point. This is where my stop loss was sitting. My stop loss got hit. It's fine. All right. But I don't want you to give up. So I want you, every time this trends break out, I want you to be in the trade. Likewise to you, Juvan, exactly the same thing. So to you other guys, Philip and Tolo, I hope you also learned a lot from the questions I had from Diliki and Juvan. All right. So we can move on to the last two so that we can get this done and wrapped up. So I'm going to stop the strategy tester from continuing here. So you guys can go practice by yourselves tonight. You saw how the practice is done. Okay. Thank you so much, guys, for your questions. I think they really helped the other guys. Okay. And I hope it's going to help all the other traders that are going to see this much later. So the next question is from Tulu. So let's quickly go back to WhatsApp and figure out what Tolu was asking us. Yo guys, I can talk forever, I'm telling you. We started at 6, it's now 10 minutes to 8. So hopefully when I do some editing, this will all go away. I can trim it down to realistic times. So Tsolo, so your first question was, if you have pending orders, can you actually use both the sell stop and the buy stop at the same time? And I said, yes, you can definitely use both. But I feel like I cheated you with an answer there. So let me go back to the whiteboard and properly explain what I meant by this. So there we go. So Tsolo, I want you to imagine that the market was moving upwards, and then it moved down from this point, and then it moved up again, and then down again, and then up again. What we're realizing is we have those same points I was talking about when we're doing that example with Jovan and them. This is still point A, this is still point B, and this could potentially be point C, but we're not sure yet, but we're gonna leave it with a question mark, okay? So basically B becomes your resistance area where we expect the market to keep moving down from there. C becomes your support area, and that's the area we expect the market to keep bouncing back up. But obviously a breakout has to happen, and you never know, the market could either go from here and break to the top end, or go from there and break to the downside. So this is why I'm saying it's very possible for you to use both the buy stop and the sell stop. So before it even breaks out, so it's still over here, what you should do then is up here, just above that resistance, set a buy stop, and down here you can set a sell stop. Okay, so whichever one goes first, whichever one gets triggered first, that's the one. Then you can delete the other one. Okay, so I have a strategy test example for you, something very simple, so that you can visualize it in the real market and see how it's really going to look like. So we're going to use the USD CAD for that example. So let me just open my platform there, strategy tester, USD CAD. Okay, time frame, we're going to use the 1 hour time frame. So the time that I want to show you, this happened on the 26th of February this year. So there we go, we've got the 26th of February up on the screen over there. So what we're seeing here is a market that had resistance points over here. So this was a resistance, and the market has broken this area over here. So meaning we have our point A, and we've got a potential point B over there. And the market from B moved all the way down and created a point C where we broke. So we go back to the candles. So C is right down here. So this becomes our new channel from there to there. And then at B. So anything above point B is a buy. Anything below point C is a sell. So all you want to do, to use proper lot sizes, please, every time you trade. So I'm going to keep to my 0.02. So I'm going to set a buy order above point B and set a sell order below point C. So here's my buy order, buy stop, placed. All right, here's my sell order, sell stop, placed. And so both of those trades are in the market, and the one that will get activated first is the one that we will go on with. So far, no active trades between point B and point C. We're still waiting for the breakout. So you can even go to sleep or relax, spend your time until you see one of those trades active and running. This will give you enough time to then delete the other trade. So it looks like the buy went in, running a bit of negative. So you can then close the sell at point C. Okay, so there we go. The market then shooting up from there. So your stop loss, just like I was showing the other guys, will be over here because this is the most recent support level. So there's your stop loss. The market has went higher, giving us a brand new support level over here. So your stop loss can then move to this area. Right? If they go higher again, we're gonna keep moving this. So if they keep breaking and making new highs, we'll keep following them. So most people that use this strategy will tell you that you should use a one-to-one risk to reward because it works out better. Basically, the distance between B and C is the distance that you should look for when you're setting your take profit. So as soon as we get to this price level over here, that will be our take profit area at a one-to-one risk to reward. So we're almost there. There we go. So we just hit it. So at this point, you can kill your trade and take your profits. So basically, that's what I meant by you being able to set both pending orders at the same time and then being able to take one off when you want to take it off. So that's what I was referring to. So I hope I answered that first part. Your second part said, which time frame works perfectly for scalpers? And I said to you, it's highly dependent on how much time you have to trade with. So I'm just gonna write down all the time frames. So it's M1, and monthly. Now I want you to think about this. If we're on the 1 minute time frame, it means it'll take a candle a minute to form and finish before the next candle comes on and does its thing. Okay, that's what it simply means. It's really nothing hectic. So basically, if you're at the 1 minute time frame, it means every minute there's a brand new candle, which is potentially a brand new trade for you, which is a lot of work. If you're using 5 minutes, it means every 5 minutes there's a brand new candle and probably a brand new opportunity for you every 5 minutes. 50 minutes will be every 15 minutes, 30 minutes every 30 minutes. H1 will be every 1 hour. So that's what I'm saying to you guys, because these are generally the short time frames. So from M1 all the way to the H1, these are short term time frames. And the reason they're short term is because you spend a lot of time looking at the screen. If you have to be there every minute or every 15 minutes or every hour, your screen time is relatively high compared to someone that's only looking at the charts from the H1 going this way, because then this is more medium to long-term trading, right? Because if you're working hard as a long-term trader or medium-term trader, you're checking your charts at least every hour, if not every 4 hours, or at least once a day, once a week, or once a month. So clearly, if you look at the screen time here, it's definitely much lower. So this here, swing trading or investing, long-term trading, allows you to have time away from the screen, and that's what we're looking for. So if you don't have this time, you cannot be a short-term trader, because all short-term traders, in my opinion, should be full-time traders. This is just my opinion. Other people defy the odds. They know exactly when the currency is going to move, but that all comes with experience. But to start things off, full-time traders should focus on the smaller time frames, because it's pointless for you to go check a daily chart as a short-term trader. It doesn't serve you with anything really. Right? So Tsolo, that's what I want to give you. If you're looking for short-term trading, the first question you should ask yourself is, can I afford the time? Do I have enough time to become a full-time trader? Right? And this goes for all of you guys in class as well. Long-term trading, if you're working, if you're schooling, this is the best place to be. If your life is just busy, go medium to long term. You'll have all the time and make all the money possible. Right? So the 1 hour is more of a medium point for me. So this is the middleman. That way, long term. This way, short term. Okay? So have fun with it. Like I said, Tolo, I use 4 hours because I spend a lot of time working. Right now I'm teaching you, so I don't have time to be looking at the charts. But because I trade such big time frames, it allows me to go back to my charts whenever I need to. So, yes, Juvan.
Sorry, just me again. I want to ask, on which time frame should you draw your trend lines? Like as we did now with the swing.
It really doesn't matter. Like if you're using the 1 hour time frame, I'm assuming that you're able to check the chart every 1 hour, if it respects your trend line or not. Okay. If you use the 4 hour time frame, I'm expecting you to be checking your chart every 4 hours because there's a brand new candle, there's brand new information for you, and that's where you should draw your trend lines. Okay. So there is the next step. There's what we call multiple time frame analysis, but most people don't do well in that because they haven't even mastered one time frame as of yet. So Juvan, as a beginner, I would suggest that choose a time frame that you feel works for you and stick on it for as long as you can and make money out of it, because that's going to help you when you want to do multiple time frames. Because swing traders or any type of trader would say to you, draw your analysis on a bigger time frame, e.g. the daily, and then look for your entries on a smaller time frame like the 1 hour. Okay, this is correct. Nothing wrong with that. Right? If you're a short-term trader, you'll look at your analysis on the hour, right, and then find your entries on the 15 minutes. But before we even move to this, do you understand that your analysis on the H1 better be good, because it's going to affect how your entries are going to look like on the 15 minutes. Can you agree with me there, John? Yes. So
yes,
it's better to just take one time frame, master it, learn how to draw on it, learn how to enter on it, and then that will help you figure out how to find better entries on a smaller time frame, because you know what you're looking for there. Unlike just using two time frames but you don't even understand one. So that's my honest opinion on that matter.
Based on my personality, Mentor, I would say I would be between 30 minutes and 1 hour.
No, that's okay.
More short to medium.
Yes.
Yeah.
So use H1 in 15 minutes. The 30 minutes, it's basically just like the 1 hour. It's not very different for me. So if I was you, I'd use H1 and 15 as my two time frames.
And as we did the swing now on the 1 hour, it would be valid on the 15 minute as well, or
yes, it will be definitely.
It would not be as accurate.
On the 15, it will go test it out. Send me some results. Show me your back testing. Okay. But in my experience, it doesn't matter what time frame you use. As long as you apply the rules properly, you should make money.
Perfect. Thank you so much, Mentor. I feel so much more confident.
I like that. I like that. So yes, thank you, Tolo. Let me just unmute you so you can say what you have to say. Yes, Tolo. So did I answer you? Did I hit the nail where it's supposed to be hit on the head?
You did. Actually, most of the questions that Giovanni was also asking, it's something that I had at the back of my mind. Yes. So along the way, some of my questions were answered, and I could see where I was going wrong. You know, we mostly depend on people that we pay signals, and you don't know why they entered a trade.
Yes.
And they, it's just you wasting money on things that you don't understand. But I think ever since I started following the YouTubes and the lessons that you've been giving, and the one that you gave that other week of March, the last week of March, I'm able to know how to draw the trend lines and all that. And one of the other things that you just answered was using the multiple time frame, because one person will tell you analyze on day one, but use your entries on 15 minutes and all that. But I'm well answered. I'm well answered. I think yeah, now I get it. And I think the most important thing for me now is just to go back and practice and maybe get one currency pair, master
Yes.
it, and, just rather than doing so many
Yes.
currency pairs, but maybe I need to pick up one of the major currencies, master it, using either H1 or H4, see how it goes before I can even confuse myself with the other time frames. But I'm so happy.
I'm happy with that. If you understand it means you're doing very well. So thank you so much, Tulu. I think you helped a lot of traders as well yourself by asking this question.
Thank you so much.
So congrats for you. So yes, guys, I'm really happy with our progress so far. And I'm glad that as I was trying to answer someone else, I ended up answering someone else. So I feel like that effect should keep going on for other traders so that they can learn as much as they can possibly can, basically. So I've got my last question here. It's from Philip. So with Philip, it was a bit different. My approach to him was a bit different from the other guys. So Philip, much like you guys, also inboxed me. Let me just go up here. So this was his first post to me, showing me what he did with his analysis. It wasn't bad at all, hey? It was actually a very nice analysis, and I gave him heads up for that. But he was saying that I sometimes get entries, right entries, and trend goes my way. I don't know, I might be lucky for it or what. And most of the time, it never goes my way, basically. So Tiliki and Juvan were going through the same thing. They couldn't find entries. They didn't know when to enter or so on. So, but with him, I realized that he doesn't have a core strategy. So this is what I say to him.
All right, thank you for that. That's beautiful. It's not enough time to be a day trader. 3 to 4 hours is not enough time. Day trading is for full-time traders, for traders that have all the time to keep checking the charts. Like, this is your daily business. You have to communicate with that chart every hour. That's the least you can do, every hour. So if you really want to be a day trader, here's a challenge for you. At 6 a.m., that's when you're going to be up and looking at your chart. At 6 p.m., that's when you can take a break from your chart. So I'm going to give you a 12-hour trading session plan as a day trader. This doesn't mean that you have to use up the whole 12 hours. Okay, if you make up your money or your target within the first 2 hours or within the first 30 minutes, then that's it for the day. You're done as a day trader. You finished your job, you hit your target as a trader, and now I want you to move on with your life and do the rest of the stuff. Spend the money. All right, so I know it's going to be a demo account at this point, but this is some real educational things you can do for your life right now.
So yes, that's what I said. I then went and gave him a task of learning moving averages, and that for the next 2 weeks he should be waking up at 6 and ending his trading session latest at 6. So it's a 6 to 6 thing. And that doesn't mean that you have to be there the full 6 hours, like I already said. Be there until you meet your target, because you're a day trader. You want to make money within the same day. So he went on and did that with his demo account, found selling opportunities, found buying opportunities, did very well here. I like the trend lines, I like everything. So let's look at the charts. I gave him GBP USD and gold to look at. So this was his trade on GBP USD, sold on the 1 hour time frame after they broke that last support level over there. With gold, as soon as they broke that resistance level at the 261 where he drew his fib, that's where he started buying from. So the trades went well, man. They did quite well. The gold was the one that started paying him yesterday, while he was still losing a bit of money on the GBP US. So he kept on going with it, kept the buy trades with the gold, kept his stop loss very close by, and had another pending buy up there So he's been doing quite well. GBP finally broke that support, so his sell finally worked out in his favor. So this is the amount of money he was making when he woke up this morning and showed me his results, $60. Now I know it's still a demo account and I know he still has a long way to go, but a few tips that I gave him were to keep his demo account size small and very, very relative to what he's going to be trading in real life. So he stated to me that he can afford $200, but anything more than that would be a challenge for him. So obviously that's the same amount of money you must deposit into your demo account so that you get a very realistic lesson out of it. Okay, so you did that. So well done, Philip. Can you tell us more or about how you feel and how this talk has helped you this far?
So, thank you for giving me a chance.
Of course, my king.
Also, everything is just super. It's fine. I don't even have a problem about it. So I even appreciate the other questions those
Yes.
traders have asked you, because they even helped me as well. Because
No, I like
some of the things I was really not understanding. And there's another problem I have actually.
Yes,
It's all about the fundamentals right now.
yes,
Because-
news trading.
Yes, because the moment I was checking the analysis this morning again, I
Yes.
started checking the fundamentals, and then the GBP. There's this other one. Let me check my notes here.
Was it GBP USD?
Yes, GBP USD actually.
Yes.
On GBP USD, I found this the composite PMI
Yes.
and the services PMI. So
Yes.
the other one, both of them were positive. And when I checked on USD, the unemployment rate, it was negative. So I didn't know how am I going to apply these two actually.
Yes.
Yeah, that's the problem I'm facing right now. Because
No, okay, that's actually a very nice question. Let me try and answer it real quick for you and also give you a bit more tips on how you can do a lot better with that trading. Ne?
okay.
Perfect, my king. I get where you're coming from. So right now you're basically trading news and you're still trying to be a technical trader. So in most cases, these two would contradict one another. Okay, so looking at the way you analyze your chart with all the trend lines and all of that, I would say you're mostly a technical trader. So your strengths are here, right, which is something I like. The news trading part is I want you to use this as volatility, right? So whenever you know the time, so the PMI probably came around 10 a.m. or 9 a.m. around that time, because that's when the Great British market opens. So go look at time sessions. I have a video on that. I want you to go re-look at that video because it will help you understand when gold is about to move, when dollar is about to move, or whichever currency is supposed to move the most. So GBP will most likely move in the early hours because that's when the stock market opens. So you will also notice that that's when the news usually come out. They come out in the morning at 9 a.m. at 10 a.m. Usually before our lunchtime. They'll have news coming out, and that's when the GBP and the euro will move a lot during those hours. Do not use the news as your indicator. Yes, you said the PMI came positive, and when PMI comes positive, it means it's good for GBP. Okay, it's good for the country. So you expected that on GBP USD, you'd see a chart that's going upwards. So let's go look at it. Let's go see what happened. Okay, so what time did the news come out? Let me go down to 15 minutes so we can really see what's going on. So in order for us to see what time the news came out, let's go to investing.com. So if you come to news and you go under economic calendar, it should take you to the news that are coming out each and every day. So this are all today's news. So I'm just gonna create some filters. I only want very important news. So this is the first thing you must always do. Find the extremely important. So importance is down here. Click the one with the 3 balls on it, and that will filter out anything that's not important. And then just click apply. Okay, so they are all the news that came out during this time. Another thing that you want to do is make sure that you've got the right time zone. So here I'm going to look for the South African time, which is usually the +2. So on the +2s, there's Johannesburg. Click on that, and there we go. So GBP released both news at 10:30. So that's the time we're going to be looking at. The news actually came out negative, worse than expected. Okay, so we're expecting the charts should be moving down during this period. Okay, so let's go back there to the chart and look for today's date at 10:30. Right over here. So you're trying to make your trading decisions here because of the PMI that came out at 10:30. Okay, they came out negative, so negative for GBP USD. So GBP USD, and the news came out from the Great British Pound, and they came out negative. So negative news on GBP USD would expect the chart to then move downwards. Okay, but I don't want you to be concerned about direction. Okay, so I want you, if you're a technical trader, cut this part out, cut this out of your trading life, because the news as a technical trader should not give direction to where you're going. Your support and resistances are supposed to do that for you. All right, so let's give this another try. So we know that right over here, there's news. And news come with volatility, meaning market movement, market momentum. So we know that after the news come out, we're going to see a lot of movement in the market. So immediately when the news, once you know the time, is that at 10:30, you shouldn't be late. You should never be late. So this would have been your most current support. This would be your most current resistance. And at this point, we're waiting for the market to then show us where it's going. So after the news came out, they made this fake movement to the upside, right? But we knew that the news were actually negative, which was really not the point. Our point was that we knew around this time, this is when the market is really gonna make a big impact on the GBP. And it finally broke support. So support broke over here. So this was your chance to then sell this trade over here and then put a stop loss over here. All right? And if it's not clear, let it go. If you don't see a broken support or broken resistance, don't trade it. It's okay. It's okay to get left out of trades sometimes. All right. So that's what I'm saying. I want you to see the news as an indication of volatility. I hope I wrote it right there. I feel like I just butchered that thing. So we're looking for volatility. Volatility is basically the how fast or how aggressive the market will move in a certain direction. So that's what you're looking for. So instead of using it to find direction of where the market will go, use it as a way to identify when the market is going to move, which is for me more important. So if you knew that they're going to move at this time, that's the only time you'd actually come and look at a trade. So this goes for every day trader. Right? Use the news to help you with timing the market, so you know when to look at a specific chart, and also go back to the class sessions and look at time sessions as your way of entering that market. So time sessions, and also understanding the news to help you with timing. you will actually do very well. Okay. So yes, Philip, I hope I answered you here. Are we more clear now?
I really understand.
You really understand now?
Yes, it makes an impact now. So I believe from Monday I'll be doing good more than
This
what I
week
did.
already.
Yes.
Well done, man. Keep it up. You've got basically one more week to go of results. If you keep practicing, you will master the strategy. That's one thing I can promise you. And use those times to just tell you when the market is about to move. And that's when you should be concerned about trading the most. All right, so keep up with USD, GBP USD, and of course, what's the other one? Gold. That's the other one I gave you. All right, so back to the chart. Here's one more thing that I wanted to show you. Since you're a day trader, I want you to focus your energy on the 15 minutes. Use the 1 hour to have a look at where the market is going, but I want you to find your entries on the 15 minutes. So that's where your challenge will be. All right?
Okay, I really understand. Thank you, sir.
It's a pleasure, my brother. All right, so that's it from me. I'm gonna cut it from here. We can further talk on WhatsApp, myself and you. And if you have any questions that you left out, we can always tackle those there. So we're gonna leave it here. Thank you for attending. Have a blessed night.